When ESG investing falls short of expectations, there are alternatives. Why are they talking about this now unless ESG was falling short of expectations? And more importantly, is it really that much of a surprise that investing based on activism instead of making a profit might not return as much money as you were hoping? Now, on the surface, what could go wrong with socially conscious investing? Literally everything. The so-called environmental, social, and governance investing craze, which aims to direct capital to companies with the best environmental, social, and governance principles, has grown from a current year minus 19 study sponsored by, of course, the fucking piece of shit UN is responsible for this too, to a movement representing 35 trillion in assets under management. And all that money is basically wasted, man. It's all going to go away. Oh, well, not my problem. Yeah, well, go broke. As it turns out, just about everything. Yeah, who could have predicted this, huh? Man, you have to be like Nostradamus to figure this out. First off, pitting ESG concerns over the mandate of maximizing return creates a sort of fiduciary mismatch that gives many investors heartburn. ESG funds are typically more expensive, with one study showing that such offerings had an AUM weighted average of 0.34% expense ratio compared to 0.12 for non-ESG market funds. So that's quite a bit, man. This may help to explain why so many investment firms tout these virtue signaling alternatives as their extra fees are great for the bottom line. Well, we're seeing what the ultimate result is. I mean, you can only keep the scam going for so long. Now, if ESG funds produce higher returns, these extra fees might be justified. Alas, evidence shows ESG funds tend to hold the same large capitalization tech stocks as the S&P 500. Not only are the portfolios similar, but their returns are also tracked closely with one another. As a result, performance of ESG funds tends to lag mainly because of their higher fees. Well, it's not about making money. It's about sending a message. It's about making a difference. Now, what about the impact of ESG investing? So the intent of the strategy is to make the cost of capital higher for companies who put profit before social gain. This typically includes traditional energy companies, cigarette makers, weapons manufacturers, other companies deemed to be conducting business in non-virtuous industries. And this is why it's so damn important to break away from this dependence on investors. If we could just break away from this, then we'll really be free. Now, unfortunately, there's strong evidence that ESG proponents, specifically those who invest in companies touting ESG initiatives, do not have any measurable effect on the ability of non-ESG firms to source capital. Well, there's always going to be alternatives. Predictably, mixing politically correct framework with an ineffective investment strategy has caused battle lines to be drawn. BlackRock, the world's largest ass man and a staunch supporter of the ESG investment philosophy, has seen an exodus of assets from mostly red-leaning states because, in the words of Florida Governor Ron DeSantis, ESG investing sacrifices returns at the altar of a select few unelected corporate elites and their radical woke agendas, which is true. That is what they're pushing. And that is what you're funding. Republicans aren't the only group irritated with BlackRock, since the firm also offers non-ESG funds. Democrats are critical of the firm for not doing enough to save the planet. It seems like playing both sides of the ESG coin can have some negative consequence, although collecting fees from both constituents seems like good business. No, this isn't going to work anymore. Like, thanks to the far left, I don't think we can ever go back to appealing to both sides again. They've polarized us permanently. Like right now, everyone just looks at it like you're either appealing to me or you're appealing to my enemy. Which one is it? If I see you supporting my enemy, I'll just assume you're getting ready to stab me in the back. Like that's basically the outlook now. So meanwhile, investing legend Warren Buffett has labeled ESG reporting as asinine and has recently paid $250 million to increase his stake in Occidental Petroleum. Billionaire investor Sam Zell, in a recent CNBC interview, said, "I didn't know BlackRock CEO Larry Fink had been made God. I just wonder whether America is really ready for Vanguard and BlackRock to control the New York Stock Exchange." Apparently, the heat got too much for Vanguard as they recently abandoned the net zero ass man pledge, a UN initiative intended to curb climate change. Look, it's all falling apart right in front of us, man. Still, the ESG train keeps rolling. Yeah, most of the wheels fell off, but it still has some momentum. It's not just going to come to a complete stop. The U.S. Department of Labor announced a final rule that allows 401k providers and retirement plan sponsors to consider climate change and other environmental, social, and governance factors when selecting investments and exercise shareholder rights, such as proxy voting. And this is why it's so damn important to make sure that your retirement plan has an ability to let you choose where the money is directed. So you can purposely avoid ESG shit. So climate risk is an investment risk, don't get me wrong, but to make a real difference, supporting a cogent energy transition framework seems like a more logical alternative. Well, it's also more expensive, at least in the short term, and that's what they want to avoid. Now, so our politicians are all about just saddling your kids with the debt for their current year actions. It's an overused analogy, but their goal is to literally kick the can down the road. And we'll make it the next generation's problem. By the time this blows up in their face, we'll be dead anyway. And then the next generation does the same thing. Like, I'm not going to deal with this shit. Oh, well, we'll make it the next generation's problem. Take natural gas, for instance, a clean burning fuel that plays an important role in the eventual conversation of green energy future once that tech has been fully developed. Yeah, do nuclear first. According to U.S. Energy Information Administration, China and India's growing middle class will more than double those countries' energy demands by current year plus. What was this now? 12. Again, the new year, man. New 2020. The bulk of that energy will likely come from crude oil and coal. A great alternative is natural gas, which is a much cleaner burning fuel. But natural gas suppliers in the U.S. have been hamstrung by two factors: the ESG movement, which restricts investment in those companies, and the current energy infrastructure restrictions of the Brandon administration that were relaxed to some extent. Not enough, though. Not nearly enough. So at this point in its history, ESG investing craze has proven to be a boon for consultants, assmans, and other firms able to monetize the virtue signaling of green technology. For the climate, not so much. To make a real difference, environmentally aware investors should consider changing their consumption patterns. 50 million tons of electronic waste are generated every year, and only 12.5% of it is recycled, according to the EPA. How important is it to have the very latest iPhone? Not important at all. I'm still rocking a Galaxy S8 as my phone. I clearly don't care. No, or consider the rare earth metals used in electric car production. Over time, electric cars produce far less greenhouse emissions than gas-powered vehicles, but their efficacy has greatly increased the longer they're on the road. It's more earth-friendly to drive the wheels off your Tesla rather than upgrading every few years. Oh yeah, I actually saw that argued before. That if you do the typical American thing of trying to get a new car every 2 years or so and you buy electric, you're actually worse than if you just bought gas. Now, socially conscious investing captures the attention of investors and firms in today's market and may suit your needs as an individual investor. But if ESG is falling short on your expectations, consider the alternatives available to make an impact. Yeah, the fact that even Forbes is talking about this, like, maybe we should try something else. I think this is telling us something.